Alrighty, we might kick off and get this started with everyone here. My name's Sherene Asnasyous. I work with Minds and Money in the IMARC team. You may have seen me at some live conferences, and now obviously we're going digital. So the main aim for all of these things is to continue to keep that conversation going, just as we do at a live event, and connect the industry. I think, as Richard has pointed out earlier, it's been an exciting way to make sure that we are still talking about best practices in projects, getting viewpoints from guest speakers, including investors and other keynotes. So just like we would do at a normal event. I'd obviously like to welcome everyone to the Minds and Money 5 at 5 event, which is being developed by Minds and Money, but is supported on a weekly basis by the Melbourne Mining Club, and through Richard Morrow. And this week's specific episode is also supported by Lowell Resources Fund. So thank you, John Forwood, and obviously Richard is part of that as well. This is the third 5 at 5 that we're running in Australia. We've had a lot of lessons that we've learnt from, and continue to grow this, and would love to get more involvement from everyone. Again, as I pointed out earlier, a number of familiar faces, but also seeing a lot of new faces join us. We've got Christine Coonan from Mitsui, I saw come in here, some of our team from Shinewing, so welcome on board, Blaney, etc. And look, we've got 2 ways to interact with our audience here. One is you can virtually put up your hand if you'd like to ask a question at the Q&A period, or otherwise you can write a question in the chat box that will come to the host, and then we'll allow you to speak then. Unfortunately, all the attendees are on mute at the moment, but during that Q&A time, like I said, put up your hand, or otherwise put something in the chat room, and I'll identify who you are and then allow you to ask your question then. I'll pass this on to Richard Morrow, who will then introduce all of our speakers for today, as he knows all of them quite well in person or otherwise virtually. And yeah, look forward to seeing what this conversation takes place today. Thanks, guys.
Thanks, Sherene. I see Nick Peterson and Daniel Kerwin have joined the waiting room there. Better let those guys in. They're very, very important people. And thank you, Sherene. And look, what a pleasure it is to be on the 5 at 5 show again, and with such great guests. I very much appreciate the Minds and Money putting this together, these webinars. I really miss the interaction we have with the Melbourne Mining Club members, and if this is the nearest thing we can get to that, then that's not bad at all. Well, we've got a big gold flavour here tonight. Nothing wrong with that. The yellow metal is up 34% year on year, and 12% this calendar year. And even better, when you say it in Aussie dollars, it's up 51% over this time last year, and a pretty substantial 25% this year in Aussie dollar terms. Great performance amongst the gold producers. I'm awarding the medal to Silver Lake as the best Australian gold miner, up year on year, up 145%. And I take my hat off to Luke Tonkin and the team for doing that. Look, tonight's chat's all about explorers. And tonight we're delighted to have some successful players in that space. First up, we're going to hear from my colleague at Lowell Resources Fund, the Chief Investment Officer, John Forwood. John's a geologist with a law background and manages the near $20 million resources trust listed on the ASX, and focus strongly on explorers here and around the world. And then next we'll hear from one of the happiest geologists in Australia, Andy Beckwith, with the remarkable De Grey mining. De Grey has been around a long time, listing in 2002, would you believe? I remember the float, actually, with the entertaining Dennis O'Mara on top of the show there. It's showing my age. Anyway, these days, De Grey is sitting on top of one of the biggest gold discoveries in recent years. Drill results there are returning widths and grades most geologists can only dream about. At 350 million in market cap today, but before drilling at Brolga, the company was valued around 40 mil. So nice work there, Andy. The company's out there rattling the can at the moment for fresh funding, but I imagine they might get killed in the rush, actually, there to get on board this one. There's a blue chip board with the great Ed Issues as a director, Simon Lill as the chair, and the money man, Bruce Parncut, on board. Nice Melbourne flavour there. And of course, our next guest is Paul Roberts, MD of Predictive Discovery. The market wasn't too predictive about this company because just a month ago, the cap was less than $3 million. Today, around $41 million. Predictive is focused on some of the great gold localities in West Africa, with most recent success in Guinea at a project called Kaninko. 46 metres at 6.58 grams a tonne gold. Nice work. That's a great drill result. And Predictive, Predictive hasn't actually had this ground very long, but we'll hear from Paul himself a bit later. Now, before I go to John Forwood, Sherene and I have some cheeky questions, which we're going to put to the audience for feedback. There's no such thing as a free lunch. We'll be calling out for votes along the way in this poll, so pay attention. Now I guess, and first to John Forwood. John, the Lowell Resources Fund has been incredibly focused on gold these days. Tell us why.
Thanks, Richard. Yeah, thanks for the opportunity to come on and have a chat about gold and a bit of the other things that we do at Lowell. Lucy, I've got a couple of slides there. You might like to throw the first one up. I was just going to talk a little bit about gold first up. Look, we are heavily overweight gold with more than 50% exposed to gold in the fund. And we see it as being having a pretty positive outlook. One of the things, I guess the drivers for gold, one of the big ones is inflation. And at the moment, that's very hard to call. So, there's not that many commentators picking what inflation is going to do out of this COVID crisis. If they are, they're sort of inferring that it's going to be weak inflation in the short term and then picking up strongly in the long term. But I think probably the best comment I've seen on inflation is from Doug Casey, who said it's going to be a bit like a lift with a crazy person with lift controls. You'll see some things going up very strongly and some things going down very strongly. Obviously, oil is having a big deflationary effect at the moment, and possibly when we come out of this crisis, that consumers, when they're allowed to spend money again, may be much more thrifty with their money. But we see that the central banks and governments are going to be very, very keen not to or to avoid a deflationary environment. And so I think we will see, at the moment, the market's saying inflation is going to be about 1.5%. And you couple that with negative nominal interest rates, you have very low real interest rates, and that you see that chart there. There's a very strong negative correlation between the gold price and real interest rates, which is what you get in terms of interest after you've accounted for inflation. So we see very low real interest rates going forward. And we think that is going to be very positive for gold. Yeah, in terms of the other sort of big factor that plays on the gold price, and that is, if you like, geopolitical risk, volatility and uncertainty. We think that factor will be positive for gold as well. So while we've seen in recent months the diminishing of central bank gold buying, and probably the Chinese and Indian physical buying of gold has dropped off, that's largely been replaced by buying by the ETFs. ETFs have been very strongly in the market since the crisis and before that. We've had a couple of questions on other things apart from gold. I think perhaps if we go to the next slide, Lucy. Oh, sorry, this slide is the dark line. This is going back, if people can see it, going back to the GFC. The dark line is the Junior Resources Index, and it's very interesting to us as an investor in the junior resources space that one of the sectors that recovered the fastest and the strongest after the GFC was the junior resources sector. And we're already seeing that happen. Even in the last month, our NAV at the fund is up 40% as of last week from the lows just a month before that, and up 20% over the last 12 months. And we've seen that, in the broader market as well, that junior resource companies like De Grey and Predictive have really been very strong over the last month, and we expect that to, if it's like the GFC, that continued for the next 3 years out of during the recovery from the GFC. Oh, Lucy, last slide, please. Yeah, we just had a question about non-gold metals, and I haven't got a lot of time here. I'm sure that people are much more interested in talking about the companies that we've got coming up. But just quickly, there was a question on iron ore and steel. On the left-hand side there, you can see a chart which shows the last 3 years of steel stocks in China, and the red line is 2020. So by now, in the last couple of years, you would have seen the build-up in steel stocks start to get drawn down. We're certainly seeing the iron ore prices maintain their strength. That's partly because of the decrease in exports from Brazil, or maybe largely because of that. Iron ore is moving through the ports in China and going through the steel mills, but at the other end, the stockpiles are building up. So, while we expect China's recovery to continue, we expect it to be muted and a bit stop-start. We won't be surprised to see further, hopefully small outbreaks of the virus happen in China, and that'll contribute to possibly a stuttering recovery in China. On the right-hand side of this slide, you can see the copper. It's a copper chart with the surplus and deficits. Towards the right-hand side, you can see 2020, where there's a small surplus forecast this year by S&P Market Intelligence. We've seen a lot of curtailment in production on the copper space and in copper mining, particularly in South America, Peru and Chile. I think they're number 1 and 2 in the copper production, copper mine production. But we've also seen a fall in the copper price. So, we think that 2020, the copper price may go sideways from maybe $2.25 a pound level for the rest of the year. But, similar to S&P, we're expecting to see those deficits reoccur if we go into 2021 and 2022.
Hey, John, that's a great rundown there on that. Your fund, where are you in that as exposed to, say, gold compared to copper?
Yeah, we're over 50% exposed to gold, and our number 1 and 2 investments have been in Predictive Discovery and De Grey, so we're delighted to have them on the line today. I think one thing that's happened in the junior equity markets which has been a significant change and a very heartening change, is to see that markets are rewarding exploration success again.
Yes.
In past years, we've seen good exploration results be an excuse just to sell, a liquidity event for investors to get out. But as you mentioned, the Predictive Discovery with a magnificent discovery in West Africa, they're up more than 10 times. De Grey, it's up a similar sort of order of magnitude. So it's maybe it's because people are sitting at home, the TAB's shut, and there's nothing to bet on, and putting the money, they're punting in the junior resources market. But certainly we're seeing a lot of interest, particularly in gold stocks.
That's great, mate. And look, hang on in there, because we'll go to Andy now, and I know you know this company incredibly well. So perhaps if you could throw in a question or two for Andy, but I'm sure, mate, is that a big smile on your face there, Andy, to be having this project? It's an absolute perler. Found blind discovery under a lot of cover. Just magnificent work, really.
Thank you. Thanks for everybody for attending. Lucy, could I pull up the screen, please? So the project's basically located within an hour's drive on bitumen from Port Hedland, so really well located, good infrastructure all around it. And off to the next one, please, Lucy. So the project area in the diagram to the left, basically Hemi's virtually right in the middle. It's 100 so back one slide, please. So yeah, that project's 150 kilometres long, so it's a big project. There's 200 kilometres of shear zones, and now we believe we have 7 known intrusion targets. One of those is turning the trumps right now, and that's Hemi. So we'll talk about Hemi in the few minutes we have. It is a new gold discovery. We have been looking for it for 4 years. We've been saying for 4 years the Pilbara should have big deposits in it. Everybody kept telling us there isn't. Hopefully in the next few months we'll definitely prove to them there's at least one, rather large one. We've certainly already got 2.2 million ounces in our other 5 deposit areas, but Hemi is undercover, whereas all the others are outcropping to subcropping. And it's taken 20 years. Like you said, Richard, De Grey floated 20 years ago almost. I've been working with De Grey 4 years. And we've been looking for this Hemi since we started looking at Taurana, one of our resources out to the west. That's another intrusion-related deposit, 500,000 ounces. We've been looking for Hemi in similar rocks. What you see down in the bottom left-hand corner is what the Hemi intrusion looks like, the mineralised portion, the gold host. And what you see in the other image is a zoom in. It's roughly about a 20 kilometre, 15 to 20 kilometre corridor, structural corridor, which we've really focused in structurally. We could recognise there was previous intrusions there in old drilling. Hemi in that circle there did not have one drill hole in it 4 months ago. Okay, we found that with 2 air core traverses, 160 metres apart, 460 metres apart, with the holes 160 metres on the line. As you can see now, we've got quite a bit of drilling in it. We've got 3 main zones, and maybe if we go to the next slide. So those 3 main zones, we initially defined Aquila and Brolga down the southern half. The black dots are the RC and diamond drilling we've been doing on 80 metre centres. Basically, we've been doing step-out drilling from the 2 discovery sections on both of them. Brolga is probably more advanced at the moment. Aquila started off the strongest with that original discovery section you can see there. Nice grade. As we're drilling that one, it's about 800 metres long. Yeah, anything up to 50 metres wide at the moment. The grade's a bit more variable along this one, and what we're finding now is maybe this zone links with Crow to the north, and it's actually one part of a bigger Crow system and intrusion. Where we're going to probably focus most of the discussion in the next minute or so is Brolga. It's just the scale of this you've got to get your eyes around. This is a 1.5 kilometre sort of squared bit of drilling that wasn't there 4 months ago. We'd put out the discovery holes in December. Nobody noticed, and in February people started to take notice. So Brolga's good 800 to a kilometre long anomaly in air core. So is Aquila, and so is Crow. It's just the scale of the things we're finding. So if we go to the next slide, and the other important thing is there's 4 immediate targets in the Hemi area, and another at least 2 elsewhere. So we'll just zoom straight into Brolga here. What we're seeing is just on the right-hand side is this cross-section through the middle. It's not the discovery section, but what it is showing you, the darker red is just a massive blob of gold mineralisation in this massive intrusion. We've not found the limits of it down dip or along strike. We're still drilling out to the east, and we're still drilling out to the west. But what we have defined to date is at least a 640 metre zone. RC and diamond drilling's well and truly over about 420 metres at the moment on 80 metre centres, and that's still being extended. But more importantly, people need to get their head around the scale. This is not just a normal deposit. That is nearly 300 metres wide. So for those people who live in Melbourne, that is almost nearly 1.5, 2 times the length of the MCG across it, across the ore body. So it's quite a large dimensional, perfectly shaped open pit resource, I would suspect. Currently mineralisation goes as deep as 300 metres. The bulk of it is sitting in the 200 to 250 metre range. It's under 30 metres of cover. We found it with the air core drilling. The air core drilling only just taps into the surface. So we've now put in the RC and deeper diamond drilling. And basically, you know, unless you can drill those deeper holes, you really don't know what's there because the air core is just a few metres into the bedrock. That's what probably encourages me about Crow. We got a similarly very large air core anomaly just going into the bedrock, and we're only just starting to put RC drilling through it. The first 6 holes from Aquila up to most of Crow, not all of it, on one section has just been drilled. Those results are pending. But we're going to have to take more time, and there's going to be a lot more drilling in Crow as well, we believe. So our current philosophy is to drill 80-metre sections with 80-metre spaced holes at the moment to scope out the scale of the deposits. We're actually hoping this drilling will give us an inferred resource, and we've talked to the resource geo today. He's pretty confident 80 by 80 will give us an inferred. Probably not much more needed for indicated, in fact. So we've got 3 drill rigs going to us, 1 RC and 2 diamond rigs. We expect to get an air core rig back shortly. We have been a little bit constrained with the virus conditions. But the main thing here is you just got to get your head around how big this Brolga deposit is. There's quite a few resource analysts spruiking numbers. Hopefully we can live up to all of that. But it's not hard to get pretty enthusiastic about the discovery and what the dimensions might mean. What it already means to us is we thought we already had an economic series of ore bodies that could turn into a deposit, a mining operation. So we're pretty confident by adding a big Brolga at least, that we have a very good chance of getting this off the ground and getting into production. The real issue is not just in the discovery of Brolga and stepping out the resource, it's what scale is this system? How many of these things may be in these intrusions? Out of the 4 intrusions near Hemi, 3 of them already got early drilling into them historically, and a bit of our drilling, and they're already getting ore grade intercepts. So we don't know what the others might represent. All we know is we've got a cluster of intrusions and then another cluster near Taurana. So we believe there's more than one. We certainly believe there's more than one just in Hemi alone. So it's been pretty exciting. That drilling should continue, hopefully unabated, for the next 12 months. That's what the capital raising's about, to make sure we've got enough funds for the next 12 months. I'll probably leave it there, and if there's any more questions.
Yeah, I think, Richard, I've just unmuted 1 or 2 people that have identified some questions for Andy, and I know that John had some questions as well. John, do you want to kick off with a question or 2 first up?
Sure, thanks, Sherene. Look, Andy, snapshot the history of the project and how you've come to acquire 100% of it.
Yeah, look, Simon, our chairman, started about 2013. It was really a shell with the latent gold project in it at the time, which is the eastern half. I got involved in 2016, so 4 years ago. We kept exploring on a minuscule budget, less than $1 million. But then we decided we wanted to look at the project on the western half, which includes Withnell, Mallina and Taurana. We did a deal with the Chinese owners. It's taken us nearly 3 years to secure that project and pay for it. We did that in August last year, $15 million acquisition. It's been a benefit for us. We've slowly ramped up exploration over the last few years to $10 million a year. Basically building those resources that were outcropping, and they're all open pittable from surface. Withnell probably will go underground, and Taurana may one day. But certainly we've been starting to look in the last 18 months, looking for the next Taurana. And obviously we've found maybe something substantially bigger in Hemi.
Okay, next question.
Yeah, we've got, I think, Nick from Mining Plus. Did you have a question or some sort of technical question that you wanted to ask? Nick, you're on mute.
Yeah, thank you, Sherene. G'day, Andy. How are you?
Good, thank you.
Actually, I just wanted to know, mapping and sampling, or is it geophysics that's unlocked these discoveries?
A lot of it's been based on original mapping over many years. Also some early geochem and early RAB drilling by previous De Grey and other parties. But the real change has probably come with the geophysics and more magnetics at the moment, but understanding what that magnetics and a few other data sets, but not many, based on the original data, and just reinterpreting things, understanding what we were seeing at Taurana and applying that to where we should be looking. You know, we're heavily structurally, we've always been focused on the structural gold in the shear zones. Taurana was something brand new nearly 18 months ago, and it made us open our eyes to another target style of mineralisation potentially. And that corridor where Hemi is has always been structurally where we thought the greatest dilation might occur around that larger granite. So we had many reasons to get there, multi data sets probably, but in the end it was probably just good. Go back, look at all the past data, recompile it, and come up with a coherent reason to go somewhere, and try to focus in on put 80% of our money in the best 20%.
Andy, don't go anywhere now, mate, because I'm really keen to get to Paul and then come back for some final questions if I could. But thank you very much for that presentation, and well played. And now, Paul, you've been having some long-deserved success now in a new nation state in West Africa. Have we got you on mute there at all? Or?
Yeah.
There we are.
Yeah.
Thanks, Paul.
Okay, Lucy, can you just put up the first slide? I'll just talk very briefly to these slides and leave more time for people to ask questions. So just a brief word about who we are and what we've been doing. We've actually been exploring West Africa for a decade. Yeah. We've only been in Guinea for about 18 months. We do have a very large portfolio in Cote d'Ivoire particularly, and also in Burkina Faso, which is largely under joint venture. But we decided some time ago that we needed 100% focus, and actually I'll mention Lowell in particular because I've had many conversations with John about changing our strategy, and these conversations have a big influence on us. So we've been in Guinea, we've ring-fenced it as 100% project area, and we've moved quite fast. Our first visit there was 18 months ago. Kaninko, this property, is only 9 months old, so it was only granted to us as an exploration authorisation, reconnaissance authorisation in June last year, and we've moved it rapidly forward. But obviously we're still very early in the game. We have a methodology that we apply across the whole of West Africa, which we call Predictive, and so we're very much a greenfields explorer. We're very much reliant on our ground selection methods, and those ground selection methods have enabled us to get into this particular area, and we have also benefited from a very welcoming mines ministry there in Guinea. So geologically, we're in northeast Guinea in the Sigiri Basin, extremely well mineralised, quite underexplored, and you can see the mustard-coloured polygons, which are our projects, and of course Kaninko, which is highlighted on the southwest corner of the Sigiri Basin, which is in yellow. So let's go on to the next slide. Lucy? Right. So this is just very early days for us. There's a lot that we don't understand about this yet, but essentially what happened was, in a sense, the key event for us was doing power auger drilling. And in fact, on this cross section, you can see a couple of vertical power auger holes where we got some quite startling results. And we actually defined over an area of roughly 450 metres long and 300 metres wide this zone of para-auger anomalism in the saprolite with an average value in 18 holes, 1.5 grams, covering about 13 hectares. So a big anomaly. We published those results initially in February and got essentially no response from the market at all, and stayed, as Richard was saying, at a $3 million company. And then we went and did this air core drilling into it, and lo and behold, what we saw in the para-auger anomaly was actually what we were finding, or possibly even a bit better than that. So we identified this broad zone of gold mineralisation. This particular section highlights the highest grade anomaly, which is 46 metres of 6.6 grams. And what's interesting about it is that it's right on the southeastern corner of our drilling so far, which is more or less in the southeastern corner of the para-auger anomaly as well. So, in fact, mineralisation on this section and all sections is open, both to the east and to the west. We haven't really got to the edge of this thing. The anomaly itself is 300 metres wide. We haven't drilled any more than 150 metres width so far on any of the lines that we've drilled. And then, obviously, to the south and to the north, this thing can grow as well. And we really have no idea of the length of it. We have only drilled and sampled to a 450 metres length, and it's essentially the same width from north to south. And so if we just have a look at the last slide, just a little bit of context about where we're going before if people want to ask me some questions. This is an image of the two prospects where we've done some para-auger drilling, northeast Bankan. So that outline that we see, the red and the yellow outline is the para-auger anomaly. Those black dots are actually the designed holes, which are roughly where we did the drilling. And one thing you can see about that image is that we haven't really tested the whole anomaly, certainly not on the 80-metre lines that we've laid out. And so there's a task to actually discover what else is in that anomaly. And then beyond that, you know, this broad thing, 300 metres wide, just extends to the north and south into no man's land. And obviously we need to find out about where that goes. And then about 3 kilometres to the west-southwest is the other prospect. And there we're awaiting for some drilling, which should come out quite soon. And certainly there's gold mineralisation down there. And interestingly, a much more active artisanal site up on northeast Bankan. There are sufficient workings, but very little in the way of artisanal workers now. And there's no people living there, which is good because it means we can drill without getting in the way of any villages. So the planning we've got, which is the obvious questions that people are asking, one thing, it's obviously clear to us that we can't stop, we have to push on. So we've got a para-auger up there, and we're going to initially map out the limits of, or attempt to map out the limits of this northeast Bankan system to the north and south. We're in discussions with various drillers to get our rigs back there. So we'll be doing a complete coverage of the existing anomaly, obviously in the northeast. We'll be drilling along strike when we get the para-auger results back, and we're drilling at depth. We'll be looking at a combination of air core and or RC, and there's a reasonable likelihood we'll be doing some diamond drilling early on in the piece, which will be very helpful for us because there's a lot we don't understand about this mineralisation. All that we do know is what's in the northeast and what's at Bankan Creek are a bit different. Up in northeast Bankan, we think we're looking at a mafic to intermediate intrusive, which is being mineralised, and down in Bankan Creek, we're seeing a combination of felsic material, probably granites or granitic rocks, and also mafic rocks down there. But at quartz stockwork up at northeast Bankan, we have seen very little quartz veining. So the drilling is described on the slide. We'll push on with the drilling as long as we can. There is a possibility up in northeast Bankan we'll be able to drill through the rainy season, and if we can, we will. And I'm also keen to get some metallurgical test work going, probably during the rainy season once we've accumulated plenty of samples and plenty of assays. I think that's enough for me.
Well, we don't hear a lot of Guinea these days. Can you give us a quick snapshot of the operating environment and how keen they are on the mining industry?
Well, Guinea's enormously keen on the mining industry because it's their main source of government revenue. Guinea is the largest producer of high quality bauxite in the world, and that bauxite production has expanded enormously. And there's obviously iron ore as well, beyond the gold. I mean, there are operating gold mines. Anglo Gold has been operating Sigiri. Nord Gold has been operating Lifa, Lero. Managem, a Moroccan mining company, is building the Tri-K mine. So there's a lot of gold activity going on, but it's still very underexplored. But in terms of the general environment for mining, it's good. Guinea has its own peculiarities, so you do have to understand how to work in that environment. But certainly we found them very helpful, and once we understand what the rules are and abide by the rules, things go well, and they've gone very well for us.
That's great. You certainly have a lot of experience in that part of the world. Now we did have some questions.
Yeah,
Sherene.
we've got some hands up over here. Firstly, Lucy from AMEC, nice to see you here. And if you'd like to ask a question to Paul.
Hey, thanks, Sherene. And look, it really actually goes on from Richard's question. Look, it's an exciting project. I wanted to know a bit more about the topography and the community that you're dealing with there in Guinea. And also what makes a welcoming government, because I think we need a few more of those in some parts of Australia.
Right. Well, yes, where the bar is set in Australia and where the bar is set in Africa are probably two slightly different things. However, in Guinea, the important thing is, and this is something that Australia's had for a long time, is that it's got quite a transparent mining tenement title system. And that is not common in West Africa. And to be honest, if you go back 10 years in Guinea, it wasn't very transparent there either. But now, essentially, what you see on the map is what you get. So if it says it's vacant, it's vacant. If it says someone's there, they're there. And also, they're reasonably becoming increasingly stringent on ensuring that people who hold ground do stuff. And if they don't do stuff, there might be a couple of years delay, but they'll take off them, which means, of course, there's turnover and there's opportunity for greenfields explorers. So that's from the government point of view. Certainly, the mining ministry has been welcome to us, but you know it's a two-way thing. In truth, when you operate in Guinea, you cannot simply rely on your piece of paper as if once you have the piece of paper you can get on and do things like you probably would in Australia. You have to work all through Africa. You have to be assiduous in your relationships up and down the hierarchy, and that's what we do. Amy Naganari, who works for me, is a really great guy. He had some very good connections before we even got there. But we have relationships with the prefect, the sub-prefect, the police, the minister right down through the hierarchy, and a number of other people who are influential as well. So relationships are really important for us, but we're fortunate, I think, in that we've done quite well on the relationships. In terms of the local community, there is a village there. There is essentially no farming going on in the areas where we've been drilling, which makes life a little bit easier. We are working well with the locals, and obviously we're employing locals in moderately large numbers actually to do work for us, and that's helpful. But also there's artisanal miners aren't necessarily entirely in favour of people coming in and drilling holes around them, and so we've had support not only from the local community but also from the administration, and particularly through the prefect of the region, to make sure that we can work. But,
now, Paul, we've got a question here all the way from Scotland from Willie McLucas. Willie, you've been unmuted for a change.
Thank you. Just to ask the speakers, watching your presentations, they're pretty low grade. They remind me of the early days in Fosterville back in the 90s. What sort of cut-off grade do you want to use these days? And do you think mining in sulfide ore at 0.7 of a gram is going to prove to be economic?
Early days. Andy, I'll throw to you.
I'll take that one on.
Yeah.
Look, yes, most of the work we've done on our existing 2.2 million ounces, we have probably 60% of it's oxide and free milling. We don't know what the percentages are on Hemi yet. Two of those deposits, Withnell and Malina, are sulfidic, and we do have to our processing flow sheet that we've been working on is a sulfide float, so a crush grind sulfide float, quite a coarse crush at 150 microns is where we were heading. What we've found is if we oxidize that with, we're heading towards a pressure oxidation, a POX plant. The benefit for us though is we're talking about a scaled down version. So instead of doing whole of ore with large tonnages, we would be doing, if we had 1 million tonnes of sulfide ore, at the moment, those two deposits would go to less than 10% sulfide. We get 90% of our gold out by oxidizing it and putting it back through the CIL tanks. We've found our costs to date in all of our studies have supported our resources at a 0.5 cutoff. Reserves obviously can change slightly, but most of our resources in the open pits would go through in that processing and those costs. Hemi just creates a completely different story. So the big thing about our processing flow sheet is you go from a warehouse down to a garden shed on the POX. The POX is not generally well known and utilised in Australia, but probably Alaska is the market darling on the gold side of things using POX. They're producing 400,000 ounces from the Turkey deposit. I can't remember its name, but basically, you know, that process has some other benefits. If there's arsenic in there, it creates a benign arsenic mineral on your environmental side. So there's other cost benefits. So whatever Hemi turns out for us, we do believe, if it's not free milling, we believe there's already a processing flow sheet already designed on our other deposits, but we are still doing some quite detailed work on that over the next 3 months. So simple answer is yes, I do believe it is possible. And I think if you look behind the scenes on some of the bigger deposits, they probably have something similar already in their system and their circuitry to handle the not so nice ores. They just don't talk about it as much.
You get a lot of wiggle room too, don't you, at 2,700 Aussie dollars an ounce, don't you? A bit more than you used to have, Willie. Yeah. Yeah,
certainly the gold price helps in Australia. Yeah, look, the scale of Hemi is probably where we'll be hoping to make cost savings. It's just a large bulk mining scenario and processing.
Paul, have you got anything to say about the Mets?
No, I do. I do actually, and it's quite important to understand that. I mean, firstly, in Guinea, the two largest producers are actually low grade. So Sigiri, the head grade there is between perhaps 0.65 of a gram to maybe 0.8 or 0.9 of a gram. Lero, maybe 1.2 grams. And they make money. And they make money for a couple of reasons. Firstly, like this, what we appear to have on Northeast Bankan, they're broad, there's quite deep weathering. So you have low strip ratio, you have soft material. Obviously in the oxide, the deeper the oxide, the better off you are. And we're not quite sure how deep the oxide is going to be on this system. But certainly it can be up to 100 metres deep in Guinea. So if you've got that relatively low grade material, you've got soft material, you've got free dig or close to free dig, and in the oxide, typically, and of course we haven't done any metallurgical test work yet, don't know what it is here, but typically you don't have any significant gold recovery problems. The economics of that kind of material, especially when it's spread over great broad widths, is quite remarkable, even in a West African context. So,
Paul, I'm going to stop you just there because we're going to run a poll. I've forgotten the other polls, but this is a beauty because you've got two great projects. You've really sort of spelt them out beautifully. But we've got a poll there, Lucy, haven't we? Where is the best place to invest your exploration dollar? Western Australia or WA? Now, how about that for a vote? Get your votes in, ladies and gentlemen, and we'll see. And while we're doing that, I'm looking at the watch. It's time to wrap up, and I want to thank everyone. It's been a great webinar. I want to thank Paul for speaking about Predictive. Andy, I want to thank you very much. You're winning the voting there, Andy. Looks like Paul, you're buying the drinks, and of course John Forwood from Lowell Resources Fund Management. Thank you very much. Thank you to Sherene and to Lucy from Minds and Money, and I saw Nick there in the background as well. It's a great concept. Thank you so much for supporting it. If this is the only way we can meet in these difficult times, it's no bad thing. Thank you very much.
No, thank you so much, Richard, and obviously the Melbourne Mining Club for continuing to support us with this, and Lowell Resource Funds for this week's episode. Our speakers are always important to us. One thing about the speakers and what we are looking to do at Minds and Money and the IMARC team is actually our first virtual event. So we're taking the actual conference and putting it online over 3 days in June, and it will include things like these sort of presentations. It will also include a plenary session. It will also include one-to-one business meetings, very similar to that of which you can experience in our live customized live events as well. And these one-to-one business meetings will allow a company like De Grey to be in a room or otherwise in a personal meeting with investors or other companies. And then also the other, I guess, feature that we do have this year as part of this virtual event will be a chat rooms. So these particular chat rooms will have 15 people or thereabouts, and you can actually interact with those 15 people as per the screen that you see here. Everyone will be unmuted, everyone will be able to interact with each other as well. So look out for that as an upcoming event. Reach out to us if you have any info or any questions that you want on that. But otherwise, we look forward to seeing you next week for the next episode of our Minds and Money 5 at 5. But again, thank you, Andy, Paul, Richard, John, and Lucy, Nick, Willie, anyone who asked questions and contributed to today, and also to all of those who continue to join us week on week. Thanks so much, guys.
Thank you very much. Cheers, then.